Hosting our discussion is David Burton, Senior Fellow for Economic Policy in our Institute for Economic Freedom and Opportunity. He oversees and focuses on tax matters, securities law, entitlements, and regulatory and administrative law issues. Prior to joining us at Heritage, he served as General Counsel at the National Small Business Association, was Chief Financial Officer and General Counsel for the Alliance for Retirement Prosperity, and was a partner in the Argus Group, a public policy and government relations firm. He has also been a Vice President for Finance and General Counsel for New England Machinery and manager at one time of the U.S. Chamber of Commerce's Tax Policy Center. Please join me in welcoming my colleague, David Burton. David?
Thank you, Jim. Well, thank you for coming. The issue of whether to replace the current tax system with a flat tax raises two fundamental questions. The first is whether we should replace the current graduated progressive rate structure with a flat or single rate system. And the second is what we should tax. In other words, what the tax base should be. Now, some of us were introduced to the flat rate income tax idea by Milton Friedman's Capitalism and Freedmen, originally published in 1962. And he argued both the economic and ethical case for a flat tax. But the modern flat tax movement really got going with the publication by Robert Hall and Alvin Rabushka of their book, The Flat Tax, in 1985. It resulted in bipartisan legislation introduced by Senators DeConcini and Sims, and was a contributing factor to what became the Tax Reform Act of 1986 during the Reagan administration. Later, House Majority Leader Dick Armey and our speaker today, Steve Forbes, took up the flat tax mantle and became the leading national advocates for the idea. Often overlooked is the fact that the Hall-Rabushka flat tax is neutral towards savings and investment. It expenses capital expenses and effectively treats all savings the same way that a Roth IRA does today. Now this proper tax base combined with steep reductions in marginal tax rates is the reason that it's so pro-growth. In public finance or modern public finance parlance, the Hall-Rabushka flat tax is a consumption tax. Now, another way of achieving a flat tax that would promote prosperity and have a very positive impact on the economy is to have a tax base equal to income minus savings and investment. This idea was called the new flat tax when Heritage came out with it in 2011. It's new in the sense that it's different from the original Hall-Rabushka flat tax. It takes a different path to get to the right answer. But it's not new in another sense. The idea has been around since at least John Stuart Mill in the 19th century and had very prominent proponents of it as the proper way to structure an income tax in the 20th century, most notably Irving Fisher and Norman Duray. I would direct those who are interested in learning more about this to a recently published Heritage Foundation paper called 4 Conservative Tax Plans with Equivalent Economic Results. The fundamental point is this: a properly structured flat tax would have a single low marginal tax rate and be neutral towards savings and investment, eliminating all double taxation of savings and investment. Such a flat tax has the potential of increasing the size of the economy by at least 15%. That's roughly equivalent to an increase in annual GDP growth of 1.5% for a decade. It would lead to renewed prosperity, higher real incomes for most Americans, and greater opportunity for the American people, except perhaps for tax lawyers and accountants. Now it's my privilege to introduce Steve Forbes. Steve Forbes is editor-in-chief of Forbes magazine. He has for many years written a regular column for Forbes called Fact and Comment. I'll highlight a few items from his long and distinguished career. In 1985, President Reagan appointed him to be the head of the Board of International Broadcasting in charge of Radio Free Europe and Radio Liberty. In 1996 and also 2000, he campaigned vigorously for the Republican nomination for president, arguing for free market, pro-freedom solutions to the country's problems. And a big part of his agenda was the flat tax, our subject today. Mr. Forbes is the only writer to have been a 4-time winner of the prestigious Crystal Owl Award, formerly given by the U.S. Steel Corporation to the financial journalist who had the most accurate forecast for the coming year. He's a member of the Board of Trustees here at the Heritage Foundation, and he's the author of many books, including The New Birth of Freedom, Vision for America, The Freedom Manifesto, Why Free Markets Are Moral and Big Government Isn't, How Capitalism Will Save Us, Power, Ambition, and Glory, the stunning parallels between great leaders of the ancient world and today, and lessons you can learn. His latest book is Money, How the Destruction of the Dollar Threatens the Global Economy and What Can Be Done About It. And then in 2005, he wrote a book called The Flat Tax Revolution, which is available for purchase in our lobby. Please join me in welcoming Steve Forbes.
Well, thank you very much, David, for that very kind introduction, and thank all of you for coming out on a early Monday afternoon to hear about taxes. I hope this news will be better than what you usually get on the tax front these days. And the reason that I'm here today is to announce that we're launching a new nonprofit organization, or a relaunch, called Americans for Hope, Growth, and Opportunity, to promote a pro-growth agenda. Unlike certain people in the White House today, we feel that we have to go through Congress and get the support of the American people before doing these things. We don't believe in presidential government by decree. Yes. But the reason for this is that our country is in trouble and the American people know it. And so we intend to agitate with intensity for the flat tax, an honest, stable dollar whose value is tied to gold, as it was for the first 180 years of this country's existence, and patient control of health care. We believe that the time for timidity is over. No more vague promises of a flatter, fairer tax code, or being content with merely calling for an audit of the Fed, or for saying we need to reform Obamacare. Now, it would be nice to reform or replace Obamacare, but we think we need to go further and spell out what is going to replace it and how to put patients truly in charge. So we need presidential and congressional candidates who have strong, well-thought-out agendas to get, in the words of John F. Kennedy, America moving again. Most of you recognize that taxes are not just a means of raising revenue for government, they're also a price and a burden. The tax you pay in income, as you know, is the price you pay for working. Tax on profits, the price you pay for being successful. Tax on capital gains, the price you pay for taking risks that work out. It's a simple proposition. When you lower the price of good things like productive work, risk-taking success, you get more of them. Raise the price, you get less of them. And the American people are overtaxed today. You all know that. Just go through your day. You get up in the morning, you turn on the electricity, look at your next electricity bill, various taxes embedded there. Turn on the water, same thing. Go to the kitchen, have a cup of coffee, probably paid a sales tax on it. Maybe have an English muffin or something else, sales tax in many states on that. You go to work, gas taxes, perhaps a toll or two. You get to work, federal income tax, Medicare tax, Social Security tax, and in most jurisdictions, an income tax, state income tax. So then you go home, you go to the store, you buy something. You may pay a sales tax on it, but you're also, in many instances, paying business taxes. In most instances, where do businesses get the money to pay their taxes? Ultimately, they get it from you, the customer. And then you get home, you go through the mail. Property tax notice. Usually they go up, not down. You have a pet. Time to renew Fido's license. Everything you do gets taxed. And worst of all, as you well know, is the federal income tax code. Once again, let's put it in perspective, because we have to hammer this home why this is an intolerable situation. Abraham Lincoln's Gettysburg Address, which defined the character of the American nation, all of 272 words. America's Declaration of Independence, 1,458 words. The Constitution with all the amendments, 27 of them, 7,591 words. The Bible, which took centuries to put together, 783,000 words. Federal income tax code, and all the attendant rules and regulations that go with it, add up probably close to 9 million words. The code itself is 4 million, but you have so much junk with it, it gets up to 8 or 9 million words. And the fact of the matter is nobody knows what's in it. And in a republic that's responsible to the people, that gets its authority to govern from we the people, this is intolerable. You call the IRS back in the days when they answered their hotline, they give you the wrong answer. GAO found at least 25% of the time. Even worse, tax preparers, volunteers trained by the IRS, the latest year we have for it is 2011, their error rate is 61%. Several years ago, Money Magazine did a survey. Took a hypothetical family's finances, gave them to 46 different tax preparers, considered the best in the field, and you know what they got back. 46 different returns, 46 different estimates of what the family owed, thousands of dollars of difference. This from people who make their living at the thing. It also corrupts American life. It corrupts our political life. It corrupts our civic life. You all know in this town the intense amount of lobbying that goes on. Probably a third to half of the lobbying revolves around the federal income tax code. It really breeds cronyism of the worst sort. There was an article over the weekend, an interview by Steve Moore with the head of Domino's Pizza, who pays the full corporate tax rate, average of 38%, because he said nobody's come to me to propose a loophole for pizza sellers. But everyone else seems to be striving for it. So it also brings out the worst in us. Come tax time, we wonder, what deductions can we take? We all know the famous case of Hillary Clinton years ago, deducting old socks from Bill as a charitable deduction. And you have an office at home. How much of that is deductible? So the IRS estimates that last year we spent 6 billion hours a year filling out tax forms, the equivalent of almost 3 million full-time jobs. In this town, too, the reason the code won't change, the reason it's going to get worse unless we take action, is that it is a source of power. Complexity is a source of power. Everyone has to come to members of the Ways and Means Committee and the Senate Finance Committee to either protect yourself from somebody's trying to do to you, or to gain an advantage over your competitors. And this thing, and also it has bred the obvious sources of power: lobbyists, tax lawyers, certain tax preparers. When I ran for president back in 1996 in New Hampshire, H&R Block, actually with a straight face, did a mailing to the voters of New Hampshire warning of the impending end of civilization if tax simplification was made a reality. This thing can't be reformed. Last year, the outgoing chairman of the House Ways and Means Committee, David Camp from Michigan, concluded a full-faith effort of trying to reform the current tax code. And what he produced showed you why it can't be done. His reform bill came to 997 pages. That tells you all you need to know. So the only answer is we've got to take this beast, drive a stake through its heart, kill it, bury it, if the EPA allows such a thing to be buried, and hope it never rises again to terrorize the American people. As David indicated, I think we should replace it with a simple flat tax. The rate that we're proposing, we've updated our flat tax proposal, would be 17%. There'd be generous exemptions for adults and for children. You should keep a certain amount of money before you have to fork it over to the federal government to keep yourself alive and your family alive. And the latest numbers are that for a family of four could have their first $52,000 of wages free of federal income tax. If you're pro-family, as some who think you need a big child tax credit believe, this is the way to do it. Honest, straightforward. $52,000 in wages free. I dare to have anyone say that's not a pro-family or pro-people being able to keep something before you have to pay your dues to Caesar. And sometimes the White House acts as if it's run by Caesar, but that's another subject for another time. There'd also be no taxes on savings and no death taxes. Dying should not be a taxable event. You should be allowed to leave the world unmolested by the IRS, or as our founders would say, no taxation without respiration. On the business side, do the same thing. Slash the rate to 17%. Do away with depreciation schedules for tax purposes, immediate expensing of business investments. If you have a loss, you carry it forward against future profits until you use it up. Also get rid of this double taxation of corporate profits from overseas. We're one of the handful of countries that believe if you earn money overseas, not only should you pay taxes to that country, but you should also pay Caesar here at home. No. If you make it abroad, you pay it abroad. If you make it here at home, you pay it here at home. So you could literally do this thing on a sheet of paper or a few keystrokes on a computer. Now, the flat tax is absolutely crucial for turbocharging our molasses-like economy. If you remember that really the tax is a price, then you can see by radically lowering the price on good productive things, we'll get manifestly more of them. Being conservative, we estimate that in the first 2 years of a flat tax, we'd get close to 6% growth. Now, that may sound high by today's standards, but remember, we've had 6+ years of punk growth after the sharp downturn of 2008. So a couple of years of 6% is pretty conservative. And then over time, 3.5%. Pretty conservative. These are historic growth rates. Remember, for the first 180 years of our country's existence, we had an average of 3.5% growth rates. That included a Civil War, a Great Depression, 2 World Wars. Greatest rate of growth over time in human history. So it can be done. Over 10 years, as David indicated, when you have an extra 1.5, 2 points a year of growth, that's almost $3 to $4 trillion of extra production. Imagine if your incomes today were 25% higher, how much nicer life would be. Or in 10 years, 50% higher or more. One of the challenges of the flat tax, of course, is that people focus on what they might lose. You can explain to your blue in the face that simplicity would be better. You would come out ahead. We designed our flat tax specifically to make sure everyone got a tax cut so we don't get in this sterile debate of who's helped, who's hurt. Everyone is helped. However, some people will say, oh, I'm going to lose this. You're going to get pushback from special interests who will say that this is going to wreck your homes. Locusts are going to take over your basement and kill your dogs and things like that. So we give people a choice. It's a variation of what Hong Kong has done for 60 years, which has had a flat tax for 60 years. Give you a choice. When the new system comes in, you can go with the new system, or if you wish. If you lack self-esteem, if you want to torture yourself, you can stay with the old system. See for yourself. We believe that this would just empty the air out of the room of anxiety over bringing in a new tax code. People would not have to trust anybody. Again, you could see for yourself which one is better. And we think 99% of the population would quickly see simplicity is better. Now, let's deal with some of the myths. One myth is that without charitable deductions, charity would go to hell in a handbasket in America. Not true. The United States has been and will remain the most charitable nation ever invented. Now, one of the reason it is because we're the most commercial nation ever invented. To succeed in commerce, you have to meet the needs and wants of other people. Even if you lust for money, as they always seem to think in the White House and Hollywood, you don't get it unless you provide something that somebody else wants. So in the marketplace, meeting the needs and wants of other people, you have to satisfy somebody that you're offering them something they want. So without even realizing it, we have a system where you're very attentive to what other people might want, even if they don't know, even if they're not sure they want it. As Steve Jobs famously said, when asked if he did marketing surveys, he said no, because people don't know what they want until we show them. So whether it's putting a new product out there or a better existing one, you have to satisfy people or you don't succeed in a true free marketplace. While you think of philanthropy, charitable giving, that's meeting the needs and wants of other people. So it's long embedded in the American culture. Whether it's in commerce or philanthropy, success means meeting the needs and wants of other people effectively. So over time, the American people, not only do they give hundreds of millions of hours a year in voluntary time, but also roughly give in terms of cash about 2% of GDP a year. In good times, it might go up to 2.2, bad times down to 1.8, but it's around 2% a year. And in the 1980s, under Ronald Reagan, when the top tax rate was cut from 70% down to 28%, a lot of eleemosynary institutions, eleemosynary, Bill Buckley pulled that word out of obscurity, means charity, but many philanthropic institutions said this would be a disaster for giving, because after all, Instead of having Uncle Sam effectively pay 70 cents of your charitable dollar of giving, he's only going to pay 28 cents. What happened was, thanks to the boom of the 1980s resulting from Reagan's tax reforms and other reforms, charitable giving not only went up, but the growth and the rate of giving went up. In short, when people have more, they give more. What we have today is almost a corruption of philanthropy when we go and say the only way you can do it is you've got to go through this convoluted shoals of the tax code, make it straightforward, and the American people will be glad to do it. It's embedded in our culture. Another myth, so remember the statistics of the 1980s. It showed, even though rates came down, charitable giving went up. Another thing they say is that mortgages, without the mortgage deduction, home ownership would go down the tubes. No one would build houses anymore. Well, we've discovered in recent years the federal government can do that without any changes in the tax code by debasing the dollar and doing crazy things with Fannie and Freddie and other things. But several things to keep in mind on the mortgage. One is only about 1/3 to 40% of the people take the deduction in the first place. It's not as widespread as we think it is. But more important, if people keep more of what they earn, in a vibrant economy, if they're earning more, doesn't that mean they're going to be able to buy more house if they wish to do so? And most countries don't have the kind of incentives, so-called, for home ownership we have in this country, yet over a dozen have higher or equivalent rates of home ownership. If you have a vibrant economy, people are earning more, they will buy a house. In fact, with a stable economy, with a stable dollar and a good tax code, you'll get more long-term housing instead of the violent swings that we have today. Another thing they say, by having a low rate, by everyone having the same rate, you're going to hurt poor people. Just the opposite. When you have a vibrant economy, people have the opportunity to move up the ladder. As that Steve Moore interview in the Journal yesterday pointed out, in Domino's, hundreds of people who start out minimum wage end up owning franchises over time. You start a low entry-level job, you learn skills, and you're able to rise up, or as Lincoln put it, improve your lot in life. So we haven't had as much mobility in recent years because we've had a stagnant economy. Get a vibrant economy, the American dream is realized again. As long as you have a desire to get ahead, you'll have plenty of opportunity to do so. Another thing they say is it'll help the rich. It'll help everybody. You all know the numbers. When Ronald Reagan took office, the top 1% of income earners paid 18% of federal tax revenues. By the end of the decade, it was over 30% and resides in the 30% range today. So if you want to get more for the rich, have a more vibrant economy, you will get more. Another one is that we must have progressive rates. If you earn more, you should pay a higher percentage to the government. Well, think of that. All that means is it guarantees, this is why the Leviathan loves a progressive income tax, is that federal revenues always grow faster than your income. So if your income goes up 10%, your tax bill will go up 15% because you go into a higher tax bracket. So the system is rigged. The better you do, even better, at least on paper the government does. So others say, well, if you have a single rate, it makes it easy for Congress to raise the flat tax. So maybe they start at 17 or 15, but then they'll soon raise it to 40 or 50. No, the real way to raise taxes is to have a complex tax code. Because we've all seen, time and time again, you can make a change in the tax code, either an interpretation or something coming out of Congress, or a decree from the White House, and it will be months before people discover what's in the thing. When you have millions of words, it's very easy to disguise these things, and people don't know what in the world is going on. The greatest defense of a flat tax is its simplicity. If you want to change it, everybody sees it. There's no way you can hide it or slip it in. So simplicity is a defense. Another one, of course, is a supermajority. If you want to change the thing upward, you have to have a supermajority. So if it only can go up, if there's a consensus in the country, you have a national emergency, we must do it. Otherwise, it can't happen. Now, in terms of moving ahead, everyone wins. The people win. The political system is cleansed. Government gets more revenue. Now, I know my libertarian friends and conservatives don't like that, but just think of it as more wherewithal to have more tax cuts. The debate then becomes, what do you do with the growing revenue? And if we're winning this debate on the flat tax, we'll be able to make more progress in the future. And just look at what's happened in recent years at the IRS, the most feared agency in government. Talk about corruption in civil life. Going after conservative groups, not just a few selected ones, but across the board, to make sure they don't participate effectively in the 2012 elections. Political suppression, we've seen with past presidents picking out certain individuals for special treatment. This is across the board. You put your head above the parapet, they'll make sure the IRS tries to shoot it. You read the other day, the agency hired several hundred new agents that had dicey or sketchy past, whether it was not filing their own income taxes or engaging in actual wrongdoing. Brought them back. That's how much contempt they have for the public. Another thing the IRS has a habit of doing now is that they investigate a business, think you've done something wrong. They seize your cash. Even if you're found innocent, they won't give you the money back. You have to sue them to get it back. And they know that most small businesses don't have the wherewithal to go in a real long fight with the IRS, so they settle. We'll give you 50 cents on the dollar. You didn't commit a crime. You're not found guilty, but they seize your assets. This is profoundly wrong. I mentioned earlier, licensing preparers, 61% error rate. Again, this thing is out of control. Now, what about alternatives to a flat tax? Some reformers advocate the national retail sales tax. Just get rid of the IRS, they say, replace the sales tax with, have it replace the income tax and the payroll tax. The real rate, the one that's out there, the so-called fair tax, the real rate is 30%. Now, here are the problems with it. 30%, you say a 30% sales tax to people, their minds immediately shut down. They think, oh my God, I buy a new house, 30% tax. You can explain to your blue in the face, oh, this will get rid of embedded taxes, you won't have the income. They'll just think, oh no, my tax rate is going up. Now, even if you get over that hurdle, the advocates of national sales tax assume that governments are going to pay sales taxes. So, the Pentagon buys an aircraft carrier for $10 billion. They assume the Pentagon will pay $3 billion in sales taxes. I don't think that's going to happen. Or in local school districts, they buy textbooks. They're going to pay suddenly a 30% sales tax. Go to the doctor, 30% sales tax, going to be tough. Assuming governments pay, very, very tough. Then, of course, we have the whole tax debate about the internet. National sales tax would end that with taxing everything that goes over the internet. You know what that's going to do to small merchants. Then they say, well, we only tax new things, like a new house, but an existing house wouldn't have the 30% tax. Now, can you imagine the debate and the complexity that's going to come from determining what's new? Let's say I have a house. I want to sell it. I know that if I have a 30% tax, if I'm a home builder and I have a 30% tax on it, awfully hard to sell. However, let's say I have an existing house. I gut the thing, absolutely redo it. So other than a shingle or two, it looks brand new. Now, is that new or is that old if you remodel a house? Then you have to determine X amount of remodeling still keeps it old. Y amount of remodeling, well, that makes it new or semi-new. You can see where it goes. We've all known about what happens in the housing market with rent control and how people hold on to what they have. If you have taxes on new houses, that's going to hurt home building, again, because who wants to move and pay 30% more? Well, if you buy an existing house, you in effect get a huge discount. There are other enforcement challenges. Sales tax goes on all services. Well, services are often intangible. How many hours did you really work for that client? Kid comes and cuts your lawn in the summer. You're going to pay 30% tax on that? I kind of doubt it. So a lot of things go through the cracks when you have a 30% rate. Now, states will have to all change their tax codes to comply with a national retail sales tax. So Washington, in effect, is dictating what kind of systems states are going to have. They also assume states will collect the sales tax for the federal government. Now, states will collect their own sales taxes, but most aren't going to give a hoot about what the federal government gets as long as they get their cut. So who's going to audit the states to make sure they're kicking back all that they owe to the government? Then you have what is a business. Now, under a sales tax, they say they don't tax business-to-business sales. So I'm a furniture maker, I buy lumber, I don't pay a sales tax on the lumber. Well, what is a business? Let's say I buy lumber and say, well, I'm going to make furniture and sell it on eBay. Okay, who's going to audit that you just didn't make furniture for yourself instead of selling it on eBay? So the complexity grows and grows. Now, the advocates acknowledge that this is a regressive tax. So they have something called a prebate, which is a play on rebate. Every month, everyone would get a rebate, a certain amount of money. Well, talk about complexity, keeping track of tens of millions of people who are eligible for rebates. Then you're going to get a debate. Should Steve Forbes get the same rebate as a homeless person out on the street? That's not fair. Then you're going to get demagoguery in elections. Oh, I'll raise your prebate. Then you have the problem that we're a big, diverse country. The cost of living in certain areas is more than in other areas. Should we adjust for that? More complexity. Then it's also unfair in a recession, which does happen from time to time. Let's say you lose your job. Under a flat tax, or even in the income tax, if you don't make the money, you don't pay tax. But with a national sales tax, if you lose your job, you still pay the 30% when you go out into the marketplace. And finally, there's the 16th Amendment to the Constitution. The 16th Amendment allows Washington to impose an income tax. If you don't repeal the 16th Amendment, I guarantee you, you're eventually going to get in this country what you have in most countries and in most states, both an income tax and a sales tax. Look all around. Canada, general services tax, value-added taxes. They usually go up in one direction. So, tough thing. On paper it sounds great, but when you look at the complexities, I think it's just easier, faster to go to a flat tax than going to a thicket of a whole new tax and hoping that Washington restrains itself from reenacting an income tax. And after an emergency, that's going to be hard to resist. After 9/11, some of you may be old enough to remember 9/11, how people felt there was a real emergency. You could have gotten an income tax through on a, quote, temporary basis in that kind of an environment. So, be careful. Now, there's one proposal out there from a presidential candidate, and there'll be other ones, the Rubio Lee Bill. Now, the Rubio Lee Bill, you're going to hear more of it because it looks like Senator Rubio may very well make a run for the presidency. It has some positive parts. It is very pro-investment. For example, it eliminates the capital gains tax, eliminates double taxation of dividends, cuts the corporate tax rate from 35% to 25%, not as low as our rate of 17%, but hey, better than the 35% we have now. It also allows full expensing of business investment, does away with the death tax, does away with the double taxation of overseas earnings. But where they need changes, though, is in their rates. They have two rates. Two rates opens up more rates in the future. That should be the big lesson from the 1986 Tax Act. Simplification, but they left two rates, 15%, 28%. When you leave two, it's very easy to make it 3, especially when you say it's only going to be the 1%. Why shouldn't they pay a little more? So you need 1, so they ought to make it 1. This is also Paul Ryan, Congressman Ryan, has been talking about a 10-25% rate, 2 rates. You can't do that. You've got to have 1 rate, or else complexity will come and breed in. Also, though, the way the bill has been presented, it has a significant number of taxpayers will pay a higher marginal rate. Under the current code, they have 2 rates, 15% and 35%. Under the current code, both individuals and couples hit the 35% bracket in the federal income tax code, a little more than $400,000 a year. Under their bill, an individual, instead of $400,000, would hit it at $75,000. And a couple, instead of a little over $400,000, $150,000. So this could be a tax increase for a lot of people. You can't have that. So this underscores the need for a simple, low rate. If you're going to do it right. So in sum, The tax code is anti-growth. It breeds corruption, breeds unnecessary lobbying, corrupting cronyism, corrupts our politics and our lives. Also, it's an instrument, as we've now seen with the IRS, of political suppression, brings on thuggish and almost criminal behavior by those who are supposed to serve us. And think, in conclusion, that number I gave earlier, 6 billion hours a year filling out tax forms. Here we have tens of thousands or hundreds of thousands of the best brains in the land focused on this nonsense of a tax code. Think over time, if those resources and that brain power have been focused instead on bringing us new products and services the way Steve Jobs did, or new medical research, new medical devices, new cures for diseases like Alzheimer's. Isn't that a better productive use of brain power and resources than this deadweight tax code? The answer is obvious. So that's why we've gone with Americans for Hope, Growth, and Opportunity. The website is ahgo.us. There's an electronic petition on there. We hope others will do it, whether with us or with others. The key thing is, Ronald Reagan was right. He said, if you want to change minds on Capitol Hill, he said, you don't do just sweet reason. The way you really do it, he said, is through the heat of public opinion. It's time to turn the heat up and make the government serve us instead of the other way around. Thank you very much. Peter.
Hi. Well, where's the good place to go? Where can I get this new
Can-
version of your?
Yeah, just going forward, can we have a mic, and if we could, so that people can hear it over the internet or in the room, if you could just use the mic. And please identify yourself and your institutional affiliation.
My name is Peter Ferrara. I'm with the Heartland Institute, the National Tax Limitation Foundation, the American Civil Rights Union, and as many organizations as possible. But I was thinking during your speech, actually.
A good agitator here.
I was thinking during your speech, gee, this guy really sounds great. Maybe he should be president. I was wondering if you had any thoughts about any future campaigns or any thoughts about people running for president this year.
Well, in terms of myself, I'm an agitator now. I'm Tom Paine mode, and tried the other one twice. I got the message. So trying to educate candidates. Talk about a hard task, but somebody's got to do it. Heritage has been trying to do it. You've been trying to do it. So we're going in that route. And the key thing, one of the key things is we have to have something pure, which I think we've put out there. But one of the key things is then we have to relentlessly go after the candidates for president and also on the congressional level, representatives, senators. They have to know that people are concerned. They have to know there's support building up, especially in primaries. Primaries are much easier to influence than general elections, where activism really goes a long ways. So making the arguments, the intellectual arguments, going out and getting friends, family, and others to put pressure, going on the internet, especially with social media after these candidates, it's all to the good. And candidates, some of them are entrepreneurial enough to say, gee, if I advocate this, I'll be different from my opponent, and I'll be doing so in a way that is positive. And one of the things that conservatives, I think, are beginning to learn, but we still have to push it a little further, is we just can't rail against big government. We just can't rail against waste in government and all that sort of thing. We have to show that our programs are exciting. And this is what's wonderful about, say, the flat tax. We remove a big source of power, and people will applaud it. Most people will be very happy with it. You get a stable dollar. A lot of power grabbing goes out the window. You get patient control of health care. Huge source of government power goes out the window. You get personal accounts for younger people for Social Security. You turn one, a liability, into an asset and capital creator instead of a capital destroyer or consumer. But also, you take another huge source of power. So let's, we can nail specific programs. Let's go after the big stuff. If we're going to go after the Leviathan, let's do so in a way where not only can we get the big stuff, but people will applaud and say, by golly, that's good. We're going to control health care. not be dependent on bureaucrats to say what specialists we're allowed to see and things like that. So time to think big instead of, oh, we're going to go after this program, cut 2% for that. No, we can do that. But, in World War II, we had island hopping in the Pacific where we picked and chose the targets to win this war. Otherwise, we'd still be fighting it today if we went after every little island and atoll. So, and then you can, if you win the big ones, then you can go after the other stuff.
I'm Joel Mandelman. I'm an attorney here in Washington. When you first proposed the flat tax bill, when you ran in 1996, I sat down. I had a very average middle American income at the time. And I figured out my tax bill, if I lost the interest deduction and the medical expense deduction, my tax bill would have gone up, I think it was 30%. And there was nothing unique about my financial situation. So if that became true for a lot of people who are middle income, one, how do you sell this idea to people politically? And two, if you're going to tell them, well, you've got this alternative, you can still use the current system, doesn't that undermine the efficacy of what you're suggesting? And secondly, doesn't it prove that, well, maybe that's really not such a great idea, or we wouldn't be giving you this alternative? And three, what is the guarantee that a subsequent Congress wouldn't take away that option and leave everybody paying the 17%?
Well, I'd love to have seen those numbers because we tried to devise that. We've had a couple of rounds on this, but the first one, a family of four, for example, I think the first one, the first $36,000, this is 20 years ago, would be free of federal income tax. And so unless you have very special circumstances, we try to get everyone in every bracket to have a cut. And when we redid it for the book that David mentioned, we specifically made sure, because we raised the exemption to $46,000 to make sure everyone is out. And with $52,000, we think with the family of four, we got that today. And we think, unless the federal tables we get are wrong and the IRS information given us is wrong, I think we hit 99%. The other thing, though, in terms of why do we have the alternative, is precisely so that people don't get hung up and say, oh, if I lose my charitable deduction, I'm going to lose, my church is going to have to shutter, or university's going to have to shutter. We're not going to have the Salvation Army anymore, and on and on and on. So, or I'm going to lose my home. So that's why we want people to see for themselves. Most people, and we've had a little test run on some of this, with the flat tax, you come out ahead. And even a couple of cases, I remember when we had the first one fellow said, I have a peculiar situation. I might come out slightly behind, but he said, the simplicity, I just would love to know that I can just do it quickly and not have to get all the reams of paper and everything. Those days he had paper to do the thing. So so that's the reason, is specifically to take away the anxieties about, am I going to lose something? You shouldn't. And if you have particularities, let us know. Go online on ahgo.us saying, here's where it doesn't work. If it's widespread, we will correct it because we want this thing to be done in a way. That's the nice thing about the internet age we're in. You can get feedback, and we can see if there's some tweaking that needs to be done. But I think we've covered most of it. And so I hope you'll like this version.
Mike's coming.
Hi, I'm Steve Enton with the Tax Foundation. I remember going through a lot of these arguments back in the 80s when I was on the Hill and at Treasury. In my own situation right now, at my age where I'm giving things away, I would lose the charitable deduction. But even so, if I got a 15% increase in the GDP and my salary and my earnings and savings income went up by even 10% or 7%, I'd come out ahead versus the loss of the charitable deduction. I'm wondering if you can explain to people just how important this would be for capital formation and wages, that in some of the odd cases where someone might come out behind initially, on a dynamic basis, they would come out ahead. And can you sell this and get it through here in Washington without correcting the way Washington scores tax bills? They
No,
don't
you,
take the growth into account, and I think dynamic scoring would help you a lot.
Steve brings up a very good point, and that is the way they score tax changes in the code. We discussed this in that book that David mentioned, is that it assumes that for the most part, tax changes have no effect on your income. And there was the famous case, I think, of Senator Packwood of Oregon, who asked for a calculation. If the income tax rate was raised to 100%, what would be the impact? And the impact was a gusher of revenue for the government. Ignored the fact you'd shut the economy down and put it all underground. So that's true, and that's why when we scored ours, we used dynamic. You have to. I mean, this is the real world. And I think people understand that, even if they don't want to in parts of this town. In terms of what you talked about in terms of dynamic in your own people's own particular situations as they meet particular phases of their lives, is one of the things we'll be having is a calculator online. So you can put in your numbers. And one of the things we should urge is that assume that in 3 years your income is 10% higher or 20% higher. What would be the impact? I think that would be a good way where people can see, oh, okay, if this thing works over a 5-year period, I would come out ahead, even if today I might be even or slightly behind. Very good point. Thank you. Yeah. Oh, we'll do you first, and then.
Laura Truman with the Heritage Foundation. Since we're sitting on something of a ticking time bomb with the entitlements, and I know most of them are funded through FICA tax, but could you talk a little bit about the interplay of if you were to move forward with this tax plan, would that help, have no effect, be challenging for the entitlement reform?
In terms of entitlement reform, one of the ways where you get some breathing room to make effective sweeping reforms, positive reforms, not root canal reforms, but positive ones, is if you have a vibrant economy. Amazingly, if you get 3.5–4% average growth rates for a few years, the entitlement time bomb goes way, way back. They assume very low productivity when they do these tables. They assume very low 2.5%, I think, growth rates. So if you get 3.5%, as you know, compounding over time. So what that means is there'll be no problem meeting the obligations of the people who are on the system or about to go on it. So then the question becomes, what do you do about younger people? Then you have the opportunity of bringing in a new system where you have your own personal accounts with proper safeguards. You know, you can't go for Las Vegas with the money or anything like that. Proper safeguards, boring stuff, index funds, pretty much boring stuff. And that way, you also, not only can you do that, but you also change the whole dynamic of how people see what they're doing. You know, if you're a kid having your first part-time job in the summer, you start to earn some money, and you're starting to accumulate money in this account for your health, you know, retirement health, and for Social Security. You're gonna, you're told this capital. Kids can say, "Oh, what is that? How do I preserve it?" And suddenly they realize this is not these entitlements are not manna from Washington. It's my labor that's creating this. I earned it. I made it possible. Very, very different psychology than the dependence they're trying to create today. And by having it out of the hands of Washington, you choose your retirement age. You may want to do it at 60 and write poetry. You may want to wait until you're 90 if you're an optimist. You can choose where it goes if you have anything left when you leave this world. So it's an empowerment of people. That's the way it should be presented, not as some green eye shade kind of thing, but as empowering young people. And so that's how you do it. And on health care, we get a little taste of it with health savings accounts, where when it's suddenly people's money, some people start to become conscious of what things cost. One of the peculiarities of health care today is we don't have real free markets. We have this disconnect between providers and consumers, and the proof of it is you go to a clinic or hospital and you ask in advance what it costs, you get a very strange look. It means one of two things. Either you're uninsured or you're a lunatic. Why would you want to know the price? What's it to you? Now, some of you are going to have lunch. Imagine going out for lunch and saying, I don't care what it costs, let Blue Shield or Medicare sort the thing out. So the system goes haywire. So by making these kinds of reforms, you get health savings accounts. And again, for people who are on Medicare about to go on in the next decade, you have to let them have the old system if they want it. You must. You cannot take away. As long as people know you're not going to take it away, they'll look at something, an alternative, just like Medicare Advantage, which is not great, but it's far better than a lot of millions of people found it far better than traditional Medicare. So if you have health savings accounts, say for even people on Medicare, if you're a couple and you have the choice of traditional fee-for-service or, Part A, Part B, D, and all the other things, or if you have a choice where you're covered for catastrophic expenses, but you have an account each year that's refreshed with $10,000 or $15,000 a year, don't you think a lot of people would say, I'll put up with maybe paying for a visit to the dentist. I just want to know that if I get cancer or something, I am covered from real catastrophic coverage. So that's the way to attack entitlements. Get that growth there, and then you can introduce reforms for younger people. As long as you're not taking away from people, they will feel, all right, younger people, the system's not going to pay as you go is not a good system. Let's do it right for them.
Perhaps one more question.
Do you, and then a quick one from you.
Pete Sepp, National Taxpayers Union. Was wondering if you could talk just a little bit more about the implications of the flat tax for information security and taxpayer privacy, what that would do to help enhance those two qualities in our society, and how far do you think the IRS would be able to shrink in terms of personnel and budget under this system?
Well, the nice thing about the flat tax, its very simplicity, just takes a lot of controversy about what is legit and what isn't legit off the table. And so a lot of stuff could go away. And another thing is, when you have a low rate, and you're making it clear the rate's going to go even lower, the incentive to cheat goes way down. It just doesn't become worth trying to save a few pennies to go into the slammer. So your enforcement division, I think, would go down. And the very simplicity of it makes it very easy to collect. I hate to cite this example, but once upon a time in Russia, when Putin took over, before he became czar for life, he put in 2000 the flat tax. Russia had a tax system. To call it a system is to flatter it. It was far worse than our own. Really, it's 4 different systems. Absolutely chaotic, horror. And he swept it all away and put in a simple 13% flat tax. Within a few years, revenues doubled. This was before the commodities boom, so it wasn't oil and gas and other things. The reason was the economy grew, but also collections became a lot easier. And because simplicity makes it easy. So in terms of privacy, yes, you're going to have anti-hacking, because whether it's complicated or not, people are going to try to do bad things. But when you have, instead of having a large amount out there, which makes it much easier to find holes for hacking, and more people, which makes it just geometrically easier to try to find ways of getting in, it's enhanced. So simplicity is a friend. So it'd be more of a routine collection agency than the horror now. I mean, truly, getting something in the mail from the IRS, your heart always skips. even if you think you've done nothing wrong, it ain't ever good news. And so it's one of those rare things when, especially when you get something from the state tax collector, oh, it's just forms to fill out for your next quarter estimate. You say, oh my God, thank God it's not a order or I'm going to jail or something. And that's, to have that kind of terror is not right. And part of the other thing is that enforcement of the code, since so complex, becomes very arbitrary, which undermines respect for the rule of law. You know, if you want people to be good citizens, people have to know what is acceptable, what isn't. But if it's up to the discretion of a bureaucrat to determine whether you've stepped over the line or not, it breeds noncompliance, it breeds a sense of adversity, and not good for a republic, not good. Quickie.
Last year, somebody come out with a list of about 250 corporate tax exemptions, special interest exemptions. Does your plan envision eliminating all of those in return for the lower tax? And secondly, other people, from different reasons perhaps, had been advocating abolishing the tax-exempt status of groups like the National Football League or Major League Baseball or the NCAA, and maybe for universities. Does your proposal envision doing that also as ways of lowering the overall tax burden?
Well, on the corporate loopholes, what the flat tax does is allow deductions for cost of doing a business. That's pretty straightforward, and that's it. So all of these special things that everyone seems to get except Domino's Pizza would go by the boards, which is a good cleansing thing. And as for exemptions, since the only exemptions for adults and for kids, it's kind of academic. Since you're going to pay little or no tax, it becomes sort of academic, certainly on the contribution side. And if there are particularities or curiosities about baseball and football, we'll look them over. But I'm not going to look at those until we get the big ones done. And then, like the island hopping, there are certain abuses out there, then we can focus on it. And the reason that it'll work is people feel now it is something I can understand. I'm complying. I have zero tolerance if somebody else is gaming the system. So you're going to, when it's not just picking, I'm going to get you, but I'm not going to get you, then people feel it's cronyism. When it's all simple, we're all in the same boat, then potential abuses are just, you can't justify them. And they don't proliferate because, again, everyone can see them. Well, I guess with that, thank you all very much. Appreciate it.
Thank you all for coming. This concludes our event today.